Hello and welcome to IndianMoney.com's YouTube channel. My name is Fayaz. In the year 2020, all of us have learned it the hard way that we have to ensure that we are keeping ourselves fit. Be it emotionally, mentally, physically, we have to ensure that our body is safe, secure and fit to ensure that we have a healthy lifestyle. But also a lot of us have learned the hard way in the year 2020 itself that we also have to ensure that we are keeping ourselves financially fit as well. Because ultimately we all are hustling every single day to ensure that we lead comfortable lifestyle. We ensure that our family has a premium experience, and to achieve it, it's very much important that as much as importance we are giving to the entire concept of earning more and making more money, it's equally important that we keep ourselves financially fit. Now, what do I mean by that? Well, you need to have a holistic approach when it comes to keeping yourself financially fit. You have to take care of a lot of aspects to ensure that the hustle, the hard work that you're putting every single day relentlessly doesn't go down the drain. So in this video, we'll talk about the 7 tips that you have to keep in mind to ensure that you are able to keep yourself financially very much secure as well as fit. So without any further delay, let's just get into it. The number one point over here is that you need to understand your assets and liabilities. Before we understand the concept of this particular point, I want you to understand the concept of assets and liabilities. So in a very simple language, in a very simple terminology, asset is anything that helps you put money in your pocket. It can be your business, it can be any kind of company's stocks, shares that you have invested, it can be gold, it can be land, it can be any other type of property. Anything which is adding more value to your profile, adding more income or money to you as an investor, as an individual is asset. And now anything that is taking money out of your pocket is your liability. It can be any type of loan that you have taken. It can be a home loan, student loan, personal loan, credit card loan, car loan, etc. For which every single day, every single month, you're paying your EMIs, you're paying your debts back. So that is taking money out of your pocket, right? So this is the concept of a liability. So as a youngster, as a young millennial or maybe a Gen Z individual, you should try to focus on adding more assets in your portfolio. And if at all you have any kind of liabilities on your head, try to get rid of them as early as possible. And if at all you have to choose between adding another asset in your portfolio or reducing a liability, you should always choose the latter one, because like this, you'll be able to save a lot more. For example, let's just say that you are fresh out of college and you have got yourself a brand new job and you're making enough money to ensure that you are having a decent lifestyle. Now you also have a student debt on your head, right? So your focus right now should not be investing in a property or buying a house for yourself. Your focus should rather be clearing of this loan. And then once you have cleared this particular loan, once you are away from this particular liability that's bothering you, then you can try to focus on adding more assets in your portfolio. Like this, you'll be able to definitely have a positive balance sheet of your own individual financial statements. Next point is assess your goals. Understand what your goal is, understand what's your vision towards life is, understand what do you want to achieve, not only in terms of your career, but also in terms of your finances. Every single year, in the beginning of the year, we have different kinds of resolutions, right? We make resolutions about being fit, having more discipline, sleeping well, eating healthy, etc. But what about our financial goals? So we need to definitely sit down and look forward to, understand what are our short-term goals, what are our mid-term goals, what are our long-term goals. So on the basis of those goals, you have to plan how do you want to approach them. Okay, so if at all your short-term goal is to get rid of your credit card debt, how are you approaching it? Are you saving enough money to get rid of that? If your mid-term goal is to probably buy a laptop or probably buy a two-wheeler for yourself, are you saving enough money for that? Are you actually planning well for that? If at all you are expecting a hike or a promotion in your office, are you able to channelize those finances over here? Are you able to, plan for your retirement, plan for your future expenses, etc. Like this, you have to definitely sit down and, have an understanding about all the bills that you have, all the different kinds of income sources that you have, and then try to, sit down and write it down on a piece of paper and understand where do you stand financially, what is your net worth. You need to definitely understand about that, and only then will you be able to get that push not only in achieving these financial objectives, but also in your career. You'll have a purpose, you'll have a motive. Every single day you'll wake up motivated because you know that you are chasing a goal. You are trying to reach to a certain stage in your career, and assessing your goals definitely will help you a lot to achieve these objectives. Next point is to check your credit report. I know as soon as we talk about credit score, credit report, the conversation gets a little bit boring, right? Because not a lot of people are into loans. I know a lot of people, as soon as we start talking about credit score, credit report, they say that, "Arey yaar, this is something for an individual who's planning to buy a house, planning to buy a car, planning to take any kind of loan. It's only something of interest for these individuals, right? I don't take any kind of loan. I have not taken any kind of student debt. I have studied in a decent college where my parents have financed my education. So I don't have to bother about my financial goals, right? A lot of people also, they end up taking loans from different kinds of sources like credit card and a lot of other digital financing companies, and they do not pay back the loan. They think that, okay, you know what, I've escaped that situations. I've given a wrong address in my KYC also. It will not come back to me. But believe me, it will come back to you in ways that you can't even imagine, because your credit score is going to get hampered. Now, what is a credit score? A credit score basically showcases how trustworthy you are as an individual. So every time you take a loan, every time you approach for any particular bank or financial institution, they ask for your PAN card number, right? They ask for your PAN number. They don't just ask it for fun. They actually ask it to ensure that they are able to keep a track of your overall history, your financial history, your banking history. And tomorrow, let's just say that from ABC Bank, you take a loan and you don't pay it back thinking that, okay, I've given a wrong address, they'll not come back to me. But it is getting recorded somewhere in your credit history. And tomorrow, let's just say that you approach another bank with a genuine interest or a genuine reason of probably buying a house for yourself. But because you have a bad credit history in the past, which probably a loan that you took out of fun but never paid back, that will come back and bite you over here when you are actually approaching a bank or a financial institution with a genuine reason, because your credit score will not be very much trustworthy of sorts. Let's just say that if your credit score is less than 700, 600, then you will end up either not getting the right kind of loan for your interest, or you might end up paying very high interest on the loan that you are approaching for. So all these factors are very much important. So every single quarter, sit down and understand what is your financial status, what is your credit report like, and try to assess it. And also there are different types of inquiries when it comes to credit score. There's something called as a hard inquiry, there's something called as a soft inquiry. So tomorrow, let's just say that you have maintained a decent amount of credit score for yourself, okay, and you're approaching any particular bank or financial corporation to get a loan for yourself, then do not apply in multiple banks together, because every single bank will do a hard inquiry on your credit score, which will negatively impact your credit score. So ensure that you are yourself assessing your credit score before you approach any kind of bank or financial organization, and try to ask informally first and understand whether they are, willing to give you a loan on that particular credit score or not, and only then you approach them formally, so that you are able to avoid the hard inquiries on your credit score. And this will definitely come very much handy, especially if at all you're going for any kind of big purchases like your house, like taking any kind of home loans or any kind of car loans, etc. So please keep in mind to keep your credit score in check before you approach any particular bank or financial organization for any kind of big ticket size loans. Next is the idea of naming your beneficiaries. Now, what do I mean by that? Every single time, whenever you go out to open a bank account, you open a brokerage account, you do any kind of insurance, any kind of investments, they always ask you to mention your nominee. So nominee ideally is a person that we give, probably someone who's very close to us, right? Any family member, it can be our spouse, it can be our parents, it can be our children, etc. So if at all you have not given your nominee details in the banking form or in the respective form of the investment, the insurance or any kind of other bank accounts, it automatically chooses your spouse to be your nominee. But let's just say that you do not really want to give your spouse as the nominee for whatever reasons. If you want to ensure that your kid is becoming your nominee, or if at all you want to give somebody else in the family to be as your nominee, you can do that provided you give the details properly. And this will definitely come very much handy in special cases. Let's just say in a worst case scenario, tomorrow something happens to you, so all the investments that you have parked in over there will be handed over to the nominee that you have given in these particular forms. So it is very much important. And I'll tell you why it's very much important. As per the report published by the Securities Exchange Board of India in the year 2021 March, it is said that amount worth rupees 1,590.67 crore is lying unclaimed in mutual fund options. Also, amount of almost 671 crore rupees is also lying unclaimed in all these financial institutions in the form of redemption, and almost rupees 918.79 crore rupees is also unclaimed lying in all these institutions in the form of the dividend amount. Why? Because if the lady or the gentleman or the account holder for that matter, if at all something happens to them tomorrow, then banks do not have the information of these nominees who are being given on these particular forms, right? So you have to ensure that you're not only giving the right kind of nominees for your respective investments, insurance, but you're also informing them timely, giving them the proper paperwork, because tomorrow, let's just say something happens to you, your entire investments and your entire hard work, the hustle that you have done to ensure that your family is having a comfortable lifestyle, doesn't go down the drain. Next point is managing your taxes. I know a lot of my friends who are very well educated, very well qualified. They have never filed their taxes. They say that, you know what, I don't make more than 5 lakh rupees a year. So why should I bother to file my taxes? Even so many senior citizens, after they get retired, they have this ideology that just because I've retired, I don't have any legal source of income. I don't have to file any kind of taxes, but they end up doing a lot of transactions in their bank accounts. But tomorrow, if at all the banks, catch hold of you, or the income tax department catches hold of you with regards to the amount of transactions that you're making in your bank account, then you'll definitely get into a lot of trouble. And let's just say that you don't really file your taxes, or you try to save your taxes through different means, through different ways. But tomorrow you want to approach a bank for any kind of loan. It can be a house loan, it can be a car loan, but you want to take a loan of, let's just say that you want to take a house for yourself, okay, and you want to buy a house which is worth rupees 1 crore rupees, and somehow with your savings, with all the investment that you have made, you have accumulated 20 lakh rupees worth of money for yourself, and you are looking for a loan amount of almost 80 lakh rupees. But if at all your banking transactions or your income tax returns do not show that you're making that amount of money, even though you are making, but because you're trying to save your taxes through various means, the banks and all these financial organizations will not gather the courage to give you a loan of that amount, because they'll think that you do not make that kind of money, right? But if at all you're actually making that kind of money, let's just say that your annual income is 12 lakh rupees or more than that, but in your banking transactions, while you're doing your tax filing, you're somehow showing it only 5 lakh rupees or 6 lakh rupees just to save taxes. Tomorrow, if at all you want to apply for these loans, then you will not be able to get the loan. But if you show it properly while you're filing your taxes, you'll be able to easily claim for such loan options, and banks should also have the confidence to give you such loans. So ensure that you're managing your taxes properly, have a quarterly understanding of the kind of money that you're making, keep a track of all your financial instruments, as well as ensure that whatever kind of money you're making, especially while you're filing your returns, please try to develop this habit of filing returns, and keep an eye on the different kinds of deadlines which have been issued by in our country, especially by the income tax department. I know they keep on extending it, but that doesn't mean that you take it lightly. So take it seriously, okay, and consciously try to ensure that you're filing your taxes on time. Especially if you're someone who is having multiple sources of income. Let's just say that you don't really stick to just one source of income. It can be a salary, or it can be your rental income, etc. If you're someone who's having a salary, who's having a freelance income, who's having a rental income, who's also making money in the form of interest or etc., all the other kind of options, try to keep a track of all of this together, because tomorrow you should not get into any kind of trouble. So each season, try to keep a track of all the kind of financial transactions that you're making, both in the banking form as well as in the cash form. Next point is check if your investments and your goal are aligned or are in sync. Now, what do I mean by that? Let's just say that you have an objective of buying a car in the next 5 years, buying a house in the next 10 years, or getting retired in the next 15 years. And you're parking your money in the form of your mutual fund options, or in the form of your equity options, or other kind of investments that you're making. But is your investment goal aligning with your objective that you want to achieve? And if at all it's not happening, then you need to definitely sit down and introspect on your financial decisions. Because let's just say that you want to retire early. To do that, you have to park your money in aggressive investment options like equities. You need to park your money in the kind of options which will give you high returns. But they also come with a fair share of risk. But are you willing to take that risk? If at all you're a conservative investor, at the same time you're telling that you also want to retire early, then that doesn't make sense, right? You have to try to ensure that your goals are aligning with the investments that you're making. And every quarterly, try to keep a check of your investment results, see how they are performing. A lot of these brokerage apps these days come with a weekly report of your financial transaction and your financial progress. So maybe you don't have to keep a tab of it every single week, but let's just say that every single quarter, every 3 months or so, it can be in the month of January, April, July, October, sit down one day and analyze whether your financial transactions or your financial outcomes, the money that you're making in the form of interest, in the form of dividend, etc., is it helping you to achieve those objectives or not? If not, you need to definitely consider investing that particular amount in something else, some other kind of investment option, and only then will you be able to align your goals with your individual investments. Next point is to check whether you have the right kind of insurance. A lot of people definitely neglect insurance, but in the year 2020, we all have learned it the hard way that we need to have the right kind of insurance in our portfolio to ensure that tomorrow if something happens to us, our families should be secure, right? A lot of people, especially when it comes to these medical transactions, medical history or medical expenses, they do not really have a health insurance in place. And to protect their near and dear ones, their family members in those worst case scenarios, they have to end up selling their assets or compromising with their long term objectives. But let's just say that you have an insurance in place, so you will be able to take care of all these kind of expenses, all these kind of medical expenses, these medical bills, these operations, etc. You'll be able to definitely keep a tab of all of your worst case scenarios if at all you have the right kind of insurance on your profile. So insurance is nothing but a helmet that you wear while you're driving your two-wheelers, right? A helmet that you wear while you're playing cricket. So a helmet is basically to ensure that tomorrow if you fall down or if at all a ball comes and hits on your head, you are secure, you are safe. But let's just say that you are not wearing that helmet just to save that 1,000 rupees. If at all you fall tomorrow from your bike, then you'll end up definitely hurting yourself a lot more, and you'll end up paying a lot more than 1,000 rupees to take care of that wound of yours, right? So to ensure that you have the right kind of insurance in place, right kind of health insurance, right kind of life insurance. A lot of people try to invest in something which will give them return on the premium amount. Let's just say that there are options like term insurance with return of premium to ensure that whatever amount of money that they are parking in their insurance, let's just say a life insurance, if at all you're a person who doesn't really believe in the idea of term insurance, and you say that term insurance is a waste of money because if at all I take a term insurance for a span of, let's just say, 60 years, and if I don't die within 60 years, then the amount of money that I have paid in the form of premium goes down the drain, right? And if at all I take a term insurance with return of premium, then I'll get the money back if at all I don't die by the age of 60. But what you're not understanding over here as an investor, that the amount of money that you're paying in a simple term insurance will be way lesser compared to a term insurance with return of premium. Rather, you can invest that extra money in any kind of mutual fund option, which will give you double-digit returns over that long span of time. So do not try to make money out of insurance expense, okay? Treat insurance as an expense itself and try to focus on having the right kind of investments in your portfolio. So this was a little comprehensive video, and I hope you liked this video and you found some value in this. And don't forget to subscribe to our channel and press the bell icon as well so that you get notified every time we upload a new video. And if at all you want to learn more about personal finance, career building, farming, business, don't forget to download the Financial Freedom app. The link of this app is provided in the description box. We have made several courses in more than 6 different languages. This app is being downloaded by more than 6.5 million plus Indians. And a lot of people are finding a lot of value in this particular application as well. The link of this app is in the description box. And if at all you want us to make videos on certain topics, let us know about that also in the comment section. Until next time, my name is Fayaz and this is IndianMoney.com English. Get wise, break free.